Hello everyone, and welcome to a new edition of Merrill's Monday Market Madness, coming at you with an update about what is going on in the Phoenix residential housing market. Hopefully keeping you updated, informed, and educated about what's going on in the market. If you own a home, you'll want this information to kind of know what the market's doing. If you're thinking about selling, if you're thinking about buying, all this information should be very helpful for you. It is a little geeky, a little very numbers based. I'm kind of a stat rat and I love looking at this stuff. But I'll try to kind of explain what it means to you if you're not so into the numbers. And if you are really into the numbers, let me know and we can do a deeper dive on what specifically is going on in your neighborhood, your house, your zip code. I really do enjoy looking some of this stuff up. So please feel free to take advantage of that service and let me know what stats you would be interested in seeing. As always, I start every episode off by a look at the month supply of inventory numbers. So right now in our whole market, we have 4,712 active listings, which is it's about a normal number for a Monday. Last Monday, we were at 4,713. Monday before that, 4,527, 4,510. Monday before that, 4,492. So we're up about 200 active listings over the past 5 weeks. So there's been some talk that oh my gosh, maybe the demand is slowing. I don't know if I agree with that. I think that it's just the time of year we get a lot more listings coming on the market. Because if you're out there working with buyers, out making offers on homes, everything still seems to have 10 offers. So I think it's just a lot more homes are coming on the market quickly, and it's just taking a little bit longer for those homes to go under contract, and update the status. So right now, total number of listings under contract, we have 13,121. And then the total number of listings that we have had close in the past 30 days is 9,037, giving us a month supply of inventory of 0.52, which again is very much a seller's market. Again, a balanced market would probably have a month supply of inventory, 4 or 5 months of supply. We're at 0.5. So as long as that holds true, supply is much lower than demand is, and we're going to continue to see rising home prices. A lot of people kind of ask me, and I did a whole other video that will get posted soon about why I don't think we're in a bubble. So, see that as soon as it comes out, and I'm not going to go deep into that information right now. But the most common question I kind of get is, well, when does this slow down? Because if you're a buyer, or a buyer who's tried to buy a home in this market, it's frustrating. It's intense. Every home's got multiple offers. It can be very difficult to get an offer accepted. And it just feels unsustainable in some ways. So what's the tipping point? What will eventually cause the market to slow down? And I believe probably one of the key factors in that is mortgage interest rates. Mortgage interest rates being at near all-time lows right now really helps fuel the market. It's fueling affordability, right? If you can finance a home at a 3% interest rate as opposed to a 5% interest rate, you can afford to buy more house because of the monthly payment. Most people aren't super focused on what the purchase price is. They want to know what their monthly payment is. So if that monthly payment is affordable to you, then that's what matters. And if interest rates go up dramatically, suddenly you won't be able to afford as much house. So right now, and I look at this site almost every single day, but Freddie Mac posts kind of this average interest rate information. And I believe last week they had average fixed rate mortgage rates at a 3.13, and today we're at 3.04. So we actually did see a little bit of a drop in rates this week, which is exciting. If you kind of look at it on a graph, it's the first drop we've seen since this week here around early January. So rates have been going up pretty steadily since early January, and then poof, out of the blue, we saw a bit of a dip this week. So if you've been holding out on an interest rate lock, or you've been holding out on a refinance or something like that, trying to wait for rates to possibly get better, now might be a great time to jump on that. They do say in their commentary up here that they are just, they talk about inflation factors and things like that, but they are expecting interest rates to increase modestly through the rest of the year. They don't define what modestly means, but it doesn't seem like they're expecting rates to skyrocket. They might go up, I don't know, 0.5% or something like that over the next year, which can be a dramatic difference for, you know, a lot of buyers. I'm not trying to minimize 0.5%. We'll see what it ends up doing, but good news for this week is that it went down. Lastly, and I've never actually shared this on the screen before, but I really love it. Our MLS publishes a monthly newsletter called the Stat Newsletter. It's obviously my favorite publication, and it explains some of the key metrics about what's going on in the market. And I'm not going to bore you with all of these numbers in here, but there were a couple of really interesting numbers that I wanted to share with you. So the first one is right here where it says total inventory. So total inventory is taking a look at all the actives, the pendings, the under contract homes on the market. So right now we're at 9,043 total inventory, as compared to the same time last year we were at 18,226. So just in the past year, the total number of homes available has been cut in half, which is, you know, a dramatic problem, obviously. And then the other metric that I found really fun and exciting is average sales prices. So average sales prices are up 25% year over year. That's probably the biggest increase that we've seen in just a year over year in a long time. Median sales prices are up 19%. And they are projecting a further increase up to 486,000 for the average sales price just in the month of April. So huge projected jump in the average sales price coming in the month of April. And again, there's nothing saying this trend is going to slow down. Average sales prices will probably be well above 500,000 by the end of summer. Obviously the number of distressed properties is way down, but then the other metric in here that I just found really, really fascinating, it does talk in the newsletter about new build starts, you know, how many new build homes are being sold, and it is, here we go. So in 2005, there were 43,426 new build homes sold. 2004 was 48,000. 2019 and 2020, 15,000 and 16,000. So if it seems like a lot of homes are being built, it is nothing compared to what was happening. And with the continued problems of lumber shortage and building supply materials and windows and cabinets and all the problems that builders are having right now, the solution to our inventory problem is not going to be able to be fixed by builders anytime soon. Last thing that was quite fascinating is just the total sales volume. So in 2021 so far, in March of 2021, our MLS saw $4.6 billion worth of real estate sold. Not only is that the biggest month ever, there's not even a previous month that hit 3 billion other than January and February this year. First month ever where the total sales volume exceeded $4 billion, and it exceeded it by a pretty wide margin at 4.6 billion. So 2021 setting out to be the most real estate ever sold in the Phoenix area in terms of dollar amount by far this year. And of course last year, 2020, was just barely beat out by 2005 or 2006? I don't remember. So anyway, that is it. I hope you found this information helpful or a little bit educational. If you have any questions or anything like that, please hit me up and I'll talk to you soon.
Sweet.